quickly. All right. And we're up. All right. Good to see everybody in the room as others are still coming in. We're going to go ahead and get started with our Monday morning huddle. Say that fast 10 times. Say that fast 10 times. I want to start off by just saying good morning. Good morning to everyone. Good morning. Happy Monday. I know a lot of us, we get into our days and we get started and no one has really just yet said good morning. And so I want to say a very, very, very good morning to everyone. Today is Monday, September 18th. And I hope that so far up to this point of joining with your Xperts University community, that you've had a great morning. And that if you have not had the best morning, that by the time we wrap up our time here together, you would have had a mindset shift and an energy shift and a perspective shift that will allow you to go ahead and make the rest of your morning a good morning and the rest of your day a great day. Today is our Monday morning sales huddle powered by Motto Mortgage Xperts. You guys know that we are here every morning, even if you don't get the text message, if you don't get the email. I know we have a couple people that are still sliding in, for whatever reason, still waking up. Listen, by 10 o'clock, I am already, Natasha, it's already going to be recorded and posted to our community in Facebook as well as on YouTube, all right? So you can grab the recording there. As I mentioned, we're here every morning, not every morning, every Monday morning at 10 a.m. For those who I have not had an opportunity to meet before, we're all, no problem. Glad that you were proactive in that way. All very familiar faces, but in the event there's someone in the room that I have not had an opportunity to meet before. My name is Ray Cole Jackson. I'm a South Florida real estate and finance attorney. I am the co-founder of Motto Mortgage Xperts. I am available to you as you need. You guys know that we provide coaching and training through our various platforms. And when we get together on Mondays, we deal with this mortgage thing, right? Also want to acknowledge in the room should be Jessica. Jessica is our loan operations manager with Motto. Many of you probably know Jessica in the real estate space as well. Jessica has been working with us and getting her groundings in the mortgage space for the past couple months or so. And so she is with us and operating in that space. You also see in the room Jessica Nowak. You guys will be hearing from Jessica more and more. Jessica is our Xperts University community manager. Our community is growing, and that's a very good thing. And what I'm glad to hear is that and see is that you guys are expressing your needs. You know, where you're needing support, where you're needing training, where you are needing resources. And so Jessica is helping me with getting all that out to you guys. Because at the end of the day, you guys know, it's about making sure that you grow your business. It's about making sure that you love your business. And so that is Jessica. That's the other Jessica. Didn't you just say Jessica? There's a Jessica Nowak and a Jessica Taylor. Taylor Story. So the two J's that will make sure if you guys were at our meeting like 2 weeks ago, then making sure that you guys are successful in that way. So the last reminder I give you guys is that when we come together each Monday morning, we're not together very long, but I can tell you that the time that we're together is impactful. I bring you nothing warmed over. I bring you what is happening in the market. I bring you what I see is necessary to move your business forward. And so during this time, I highly suggest that we tap in. Block out this time to focus, turn off distractions, and take notes. Note takers are action takers, okay? So why did we launch this weekly sales huddle? Many of you probably do weekly sales huddle in your own brokerages, and that's great. I can tell you that you can never get too much information, especially in today's market, because things are always changing. This is a different market, and so sometimes you like they say, You guys have probably heard of Napoleon Hill, and they talk about the mastermind strategy. The mastermind framework is that two heads are definitely better than one. And God knows that more than two is always better than one. And so when we come together each week, it's for the purpose of bringing, again, it's a mastermind. It's an opportunity for the best of the best and those who are out there fighting through the different changes in the market to bring the information to you so that you can just hit the ground running each week. Also, it's a mindset shift. You guys are the CEOs of your very own real estate business. And many of you, most of you, you probably operate as what we call a single agent, meaning that you are, they say chief cook and bottle washer, right? You are all things to your business. And sometimes that could get a little bit lonely. Sometimes it could get frustrating. Sometimes it could be challenging. And so the best antidote to those ruts is to do a mindset check-in. I assure you, the best antidote to the funks that you get in is to first check in with your mindset and figure out what is the compass of your mindset? Where is it pointing you to, right? We also quickly discuss a market update, what's going on in the market that you need to know. And then ultimately, at the end of the day, it is to get you to new money, right? Remember that I always tell you guys, whatever deals you closed last week, whatever's under contract, congratulations, great. We're glad that that is in the hopper. Now it's time to go get new money. All right. So with our mindset shift this week, I want to discuss the WIN formula. And many of you might have heard this before, but for those who have not heard it before, I want to introduce you to it. It's something that will help you win every day. So it is something that will help you win, pun intended, every moment that you don't have clarity. Every moment that you do not have clarity and you're feeling inundated with a lot of tasks, a lot of responsibilities, a lot of requests, a lot of things to do, I want you to pause and activate the WIN formula. The WIN formula asks, what's important now? What's important now? Of all the competing interests, of all the things that are coming at me in this moment, what is important now? I assure you, regardless of how important all these things might seem to everyone else, what's important right now to you? What must you address now? What is going to move the needle for the issue that's most important to you right now? Now, of course, when we get on these calls, it's generally about your business, right? And so we can definitely have a conversation around what's important right now concerning moving your business forward. But there's going to be moments where we're going to look at the person first, right? What's important to me right now, because my business won't be able to function just because I'm not in the right headspace. So what's important right now for me to get in the appropriate headspace? Yes, Charlotte, do you agree?
Well, I want to share something with all of you that about 5 weeks ago, I was in a very terrible car accident. I was not at fault, but that messes up with your mindset. And I'm telling you, if it wasn't for my real estate people around me and my network that was constantly on me, supporting me, it would have been a different story. My mindset is back. It's coming back. I'm back into the real estate, but they were keeping me going and holding me up. It was amazing.
Yay. I'm glad to hear that. Thanks for sharing that. And you know, I'm glad that you shared that your mindset was keeping you back. Your mindset was allowing you essentially to not perform, but sometimes you guys have probably heard this term before. If you not, then it'll resonate, especially what Charlotte just shared. Sometimes you have to borrow the mindset, borrow the belief of other people just because I'm not there. The same way you tangibly borrow money, right? Borrow a cup of milk or borrow a pen because you have it right now. Sometimes that mindset, you're like, I just don't have it right now. I just don't. Like Charlotte says, she's like, I don't have it. And it's not anything that she did wrong. She told you exactly. She said, I wasn't even at fault. but I still found myself in this situation. And I don't have it right now because of that situation. And so she was able to borrow the mindset of her network, of those who are around her, to keep her moving forward. And like she said, I'm back, I'm moving forward now, but I can testify, I can give witness to, yeah, there was a space and time when my mindset wasn't there. And so I'm glad that you shared that, because again, it goes back to reiterating, guys, that that's the reason why we start these calls. We start these calls with mindset, because I know some people come into the room with stinking thinking. You probably just got off a bad call. You probably got bad news. You probably just like, and I mean, every day, thank God it's Monday. Every day should be a great day. And we should not borrow, using Charlotte's example, let's not borrow the mindset of the naysayers that are like, oh, it's Monday. Okay, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, right? Wherever you are, there you are. So with that being said, with regards to the win formula, what's important now? What's important now? And so Charlotte made a good example about what was going on with her personally, physically, because of the accident. And so what was important for her at that point was to get her headspace together, because it was going to affect her business, right? And so now that we're here, and now that we understand, okay, I've shaken off the negative thoughts, I've shaken off, the who, what, where, when, and why, and how, and that what's important now. I've addressed that. Now, what's important now in my business? Because at the end of the day, that's the next thing that's important to us, right? God, family, business. That's me. I'll say that. I don't know what your three things are, but God, family, business, right? So, and family obviously includes yourself. And so now that you've gotten there, what's important now with your business? So Monday morning, what's important now for your business? What's important now for your business? If you have a business plan, if you've been tracking, if you have a business plan and you've been tracking your actions and your productivity and your results in your business, what's important now to move your business forward? We know there's essentially 4 key components of our business. We know there's marketing, sales, delivery of that service, and then the administration, operation. Is our marketing on point? Are we getting enough leads, right? Is there enough information out there about me and why you should work with me? That's fine, great. What about sales? Am I converting leads? Am I getting enough sellers listings, right? Am I getting enough buyer consultations, right? And if I am, great. How is my delivery system? Am I frustrated because I just have too many deals? I probably need a transaction coordinator, right? Do I need a transaction coordinator because this is what I was hoping for, but now I'm just frustrated. I'm getting emails all the time. I'm scrambling to get to open houses just because my delivery system, I can't answer every call. There's so many emails. My delivery system is challenged. Is that what's important now? Is it operations? Are you still not an entity? Tax season is finalized for those of us who are late filers, but if you were still one of those ones, are you still, 1099 yourself? Or do you have a business set up and you're W-2 because you realize that's the best setup, right? For liability and income purposes, wealth building purposes, right? Emails, websites, that's the admin and that's the operation side. What's important now? So again, on this Monday morning, as we venture into this week, what's important now? If you are in a funk, if you're still in bed right now, what's important for you right now is to get up, get your mindset right. If you're up, if you're in front of the computer, what's important now is your income producing activities. What's important now is income producing activities. Okay? And what are my income producing activities? Those are the activities that are going to get me closer to either a listing or a buyer, right? All right. I think I dug in there long enough. Just make sure we get that together. Thanks again for sharing, Charlotte. So market update. Interest rates have not gone down 3% over the weekend. They are still where they are. They actually ticked up a little bit higher on Friday with the average interest rate of 7.29% for a 30-year fixed interest rate loan. That's just on average, right? And then just for, industry news purposes, for you guys to be in the know with industry news, the Fed meeting is scheduled for September 20th, right? September 20th is the Fed meeting. And so make sure that you guys are following that. And again, I don't expect you guys to be experts in all things interest rates and how they're calculated and be able to explain the formula, but this affects your business directly. This directly affects your business, right? Sellers want buyers. Buyers want sellers. And there are some realtors who are like, oh, I only work with listings. Okay, great. Guess how long it's taking for listings to move off the market now? They're not flying off, right? And this is because you have less buyers in the market. So we all know now we might be looking at a little a balanced market now. Maybe not a seller's market anymore, because now buyers are getting slim, right? So that's the market update. Now, with that being said, let's go into our deep dive. Last week or so, I mentioned be the guide. Be the guide. Be the guide. And I wanna go further. I want to dive deeper into this concept of being the guide, to make sure that it's not just a conversation, but it is a framework that you plant into your business, especially when it comes to marketing. That's the top of your business. That's the top of funnel. So why do I want to reiterate that on the heels of this talk about interest rates ticking up a little bit higher? Guys, most consumers are ultimately looking at their monthly mortgage payment. They are not like, oh, interest rates are 8%. Okay, well, if I tell you the interest, if you're currently renting and your rent is, call it $2,500 per month, and interest rates are 20%, but you can purchase a house, you can be a homeowner, make an investment in real estate, let's call it even, and make the same monthly payment of $2,500 per month, would you proceed with the loan application? I would think most educated consumers would say yes. Right? So with that being said, we're not leading off conversations about the market with what the current interest rates are. Now, again, you should be aware of that because you're in this space, but don't let, again, what do I always tell you guys? MSNBC, CNN, Fox News, all these other television stations educate your clients. You are the market expert. You should educate the consumer. You be the guide. You tell the consumer, listen, this is an opportunity for you to make a real estate investment. At the end of the year, what we know for sure is that your rental payment is going to go up, right? That's just what they do. They rarely go down. As a renter, as a homeowner, at the end of the year, not even at the end of the year, month over month, during COVID, it was day to day, week to week. Your equity, the value of your real estate investment is going to go up. Are we having that conversation? Are we explaining that to consumers so that their framework is different? So again, does the interest rate really matter? Now, the interest rate matters once we get to a qualification, qualifying them, right? Because affordability is affected by that interest rate. But if you can afford, if you qualify and affordability puts you at a place where you are making the same payment or less, or possibly a little bit more, but at the end of the day, you're gaining equity because you're now an investor. You've made a real estate investment, right? Is that a better option for you? I would venture to say yes. And so let's not make this conversation around investing in real estate equivalent to, even buying a car or a pair of shoes. Someone who does not own real estate, making a real estate investment is a life change for them. It is a life change for them because it has placed them on a trajectory for wealth building, generationally, and even in their own life that renting can never do, right? So now what does this mean for you and your business? Because we always want action steps. Curating purchase ready buyers. You guys are always going to hear me say the term purchase ready. We don't want just a buyer. We want a purchase ready buyer. We want a buyer that is ready to purchase, right? And ready to purchase means that they understand the framework around purchasing a home, qualifying for a loan. If they are financing their transactions, most over 80% of buyers are finance buyers, right? And so for that reason, it is imperative that as real estate professionals, we're able to fluidly and easily have this conversation around purchase money loans, right? So in curating purchase ready buyers, the last point I want to make before we move on is that, again, time is money. So when you're marketing and prospecting, yes, the funnel is wide. And you're going to have a conversation with anyone who's willing to have a conversation about purchasing a home, but you got to be able to quickly sort out who's a purchase ready buyer and who needs to get ready to purchase. Who's a purchase ready buyer and who needs a little bit more time to get ready to purchase, right? So that's point number one. Point number two, I want to give you guys a quick framework in case this has never been introduced to you before, around how the framework lenders use to determine a borrower's approval for a loan. It's a quick framework that you should not forget. It should be easy for you to remember this. It's an acronym called IPAC, I-P-A-C, I-P-A-C, IPAC. This is the framework that lenders use to determine a borrower's approval for a loan. Now, IPAC, the acronym it's an examination of, first, the I stands for income, the borrower's income. So when they make a loan application, do you have sufficient income? Both proof of income, that's your work history. So when you hear lenders asking about 2-year work history, this is what they're looking at. Proof of their income. And then, of course, is it sufficient income to qualify for the loan amount that they're seeking? That's a whole different conversation. So if you're speaking to a buyer and the buyer has a annual income of $45,000, do you think they're going to qualify independently for a $300,000 loan? Probably not. Probably not. And especially not at today's interest rates. And so with that being said, when you're having conversations, casual conversations, right? And you're gonna run these prospects through this framework, even just in your head. So you're asking, oh, where do you work? Oh, okay, great. In the back of your mind, you're saying, oh, how long have you worked there? Okay. Now, mind you, don't worry about, they say they've been in school. There's a way for lenders to, they will account for that. But generally, if someone's like, oh, I just started working, I've been working there for 9 months, you're gonna say, that's a challenge in your head. That's a challenge. Well, generally lenders require about 2 years of work history, verifiable work history. And then how much are you making? Say, oh, but I'm making $90,000 a year. Okay, well, they probably can, figure there's likely a way to where were you working before? Oh, it's my first job. Oh, okay. All right. But you do understand that there is a conversation around income. Now, what if that borrower only makes $45,000 a year? Okay. Now we're possibly having a conversation about bringing on a non-occupant co-borrower. But again, IPAC, income. The P stands for the property being purchased. Now, for our purposes, when you're having this preliminary conversation with buyers, the property generally does not come until the end for the full loan approval, right? So this is where, when a buyer is pre-approved, the lender is looking at them personally, because the property is going to come later, right? Once they go into contract. So for your purposes though, when you're having a conversation, because actually one of you guys sent an email on this maybe about a week ago or more. We're here in Florida. What I would tell you as it relates to the property piece of this framework, condos, learn to access the list of condos that are already approved for financing. FHA, Fannie Freddie approved. Can lenders make an application for spot approval? Sure. But why do we even want to go down that path? Right? So you know the framework. So if someone comes to you saying, oh, I want to purchase a condo, you're like, okay, here we go with this, right? Know that condominiums, oftentimes they're going to require sometimes 20% down for their approvals, right? So IPAC, now we're looking at property, right? Assets, that's the A in IPAC. Does the borrower have enough monies to close? That's their cash to close. For you guys, if a borrower comes to you and they say, listen, what I have is $10,000. Let's go back. Let's say 5. In your mind, you should be thinking, well, they got to make an earnest money deposit. All right. Most contract, I have not seen one in recent times that's less than $5,000 earnest money deposit. So do they have sufficient assets, right? Do they have sufficient assets? Because you're going to need at least cash up front is a earnest money deposit, the inspection. What about the credit report, right? If they're working with a lender that's going to require them to pay for their credit report up front, and the appraisal for sure. Good morning, Michelle, right? We'll drop a link in the community, Gail, right? So this is the assets framework around it. So IPAC, IPAC, asset, and then credit. Credit repair is an option. You guys know that for FHA borrowers, they can go down to, as you know, the drones of 500 credit score. That gets very difficult. Can it happen? Sure, but that gets very difficult. You guys know that the borrower's credit score is going to affect their interest rate. So the lower the credit score, the higher the interest rate is going to be, which is also going to affect their loan amount, their affordability, how much they can afford. So as a general matter, when you're having this preliminary off-the-cuff conversation with prospective buyers, where you want to be at a minimum, I would suggest, is 620. 620. At a minimum, I would suggest 620. Now, if your borrower is high income but low credit, that happens. Listen, I'm gonna tell you this: high income, low credit. Yeah, high income, low credit. They're professionals. High income but low credit scores. That's fine. There's opportunity for credit repair. But again, this is the framework. So now, as you're having these off-the-cuff conversations, number one. Number two, in your marketing, be the guide. I'm telling you guys this again for you and your off-the-cuff conversations, right? As you're running potential buyers through this framework, because you want to already know whether or not they're purchase ready or they need to get ready to purchase, right? So with this information, I want you guys to take this and plug it into your marketing framework, because time is money. We'll work with everyone, but everyone isn't purchase ready, right? When I say we, I'm not talking about just us as a lender and you. I'm talking about us, you lender, you as a realtor, us as a lender. We work with everyone. But for you guys, when time is money and you want to make sure that you get to the closing table as soon as possible, having this conversation with possible buyers, so they'll know even before they reach out to you. IPAC. So you say, oh, remember, I want to introduce you to this framework that the lenders are going to use when they approve you for the loan. It's called IPAC. They're going to look at your income. So we want to make sure that we have a 2-year job history, sufficient income that we can document. They're going to look at the property, which obviously we're going to make sure that when we go out to see properties, that the property just has to appraise generally. Now, unless you're looking at condos, are you considering a condo? If so, we need to start looking now, because I would want to only show you units in condo projects that are already approved. Yes, lenders can do spot approvals, but those are, oftentimes that can be a shot in the dark. So let's just be smart. Let's just make sure if you're considering condos, let's go ahead and take a look at this list of approved condo projects. All right. And then assets. Now, generally, once you go into contract, we're going to need to make an earnest money deposit. So far in this market, most sellers are not accepting anything less than about $5,000 in an earnest money deposit. Some other upfront costs are going to be your inspection of the property, the cost of the inspection. You may have to pay for the credit report. Definitely the appraisal. The appraisal is likely going to be a cost that you pay. Even if the lender has a program where they're going to reimburse you, that appraisal is likely going to be an upfront cost. So with that being said, how much cash do you have on hand for closing? How much cash do you have on hand for closing? Because in addition to those upfront costs, we do have some closing costs. Now, there are some down payment assistance programs that we can look into, but we do need to get a handle on your assets, what you have available. And then lastly, the last thing they look at is your credit. Have you checked your credit score lately? Okay, so I know you can go on freecreditreport.com, and then they'll give you your credit report for free to actually see your credit score. I think they charge you a small fee. It's best that you go ahead and take a look at that. I would suggest that the credit score be at least about a 620. My lender can work with credit scores that are lower than that, but just know that your interest rate, that whole interest rate thing that everyone's talking about, is going to be affected by your credit score, right? So, are we ready to get you purchase ready? Yeah, we just ran through that. IPAC, IPAC, income, property, assets, credit. You guys are going to be amazing. I'm going to be running through, having these conversations. Now, how do I use this? Again, you're going to use it in your marketing. You're going to use it in your buyer consultations. You are going to become the go-to person, right? You're going to become the go-to person. You can even use this when you're working with your sellers, right? You can even use it when you're working with your sellers, because you're going to say, with regards to the property, what did we say? The property needs to appraise. So when you're going through your listing appointment, you say, well, we know that there's cash in the market, but 80% of buyers right now are still going to be financed. So when we put this on the market, this is for your sellers that are trying to place the property way outside of the range of value. The property has to appraise, right? So you say to your seller, well, we know that the framework that the lenders look at to approve a buyer is IPAC. The buyer's income, the property, though, is on us. We have to make sure that the property, that when we go into contract, that it appraises, right? And so, yeah, I want to get you $1 million as well, but the likely market value is about 800. If not, it's just not going to appraise, and the buyer's not going to be approved. All right. See, I can use it on. You can use that framework both ways. Nice. All right. Yeah. So, there is a list. We're going to drop the link to the list in the community. We'll make sure to drop that list in the community for you guys, right? And you'll be able to search for approved projects. Now, with that being said, too, if you guys are working a project, when you go look at that list, if you know there is a project that you would like to sell in, and you're like, wow, I'm surprised that project is not on this list, you can reach out to us with that project, and we could potentially work with our lenders. We do have some of our lenders, one of our lenders for sure, has a department where they will work with condo projects to get them approved. Again, spot approvals are a thing, but you guys know after the condo collapse, it is very stringent. Examination of condominium projects is very stringent, very exacting, okay? All right, so that's our huddle. This Thursday is Show Me the Money, how to review closing settlement statements and calculate closing costs. Is going to be on Thursday from 12 to 1. You guys should get that notification if you're not signed up. Yes, that would be the closing cost calculator. Jessica, please put that in the chat. The closing cost the link to the closing cost calculator. Okay. Lastly, Natasha was trying to record earlier. Remember that these recordings are going to be, they're in our community. They're also posted on our Experts University YouTube page. Make sure that you subscribe to the YouTube page. With that, you'll get a notification every time a video is posted in the event for some reason you're not able to make a training. All right. All right, guys, this has been a meaty call. If you have any questions, feel free to reach out to us. My information is there. Jessica's information was earlier. Gail, you had a question in the chat. Gail. Okay, that was about the list. Got it. All right, guys. No, thank you. I'm glad. I will see everyone on Thursday and our sales huddle again on Monday. Charlotte, thank you again for sharing. I'll see you guys later. No, thank you.